Vanguard's S&P 500 Index Fund ETF has an expense ratio of 0.03%. To show you how low a 0.03% expense ratio actually is, let's assume that we have two 25-year-olds that are investing for retirement. Person A invests in a low-cost S&P 500 index fund. Person B invests in an actively managed U.S. large-cap stock fund that has an expense ratio of 0.75%. Person A makes an initial investment of $5,000 and contributes $500 a month for 40 years. And if we use a 10% return and subtract the expense ratio, we have a return of 9.97%. In 40 years, person A would have $2.85 million for retirement. Person B, on the other hand, invested the same initial amount and also invests $500 a month in an actively managed mutual fund. Assuming the same 10% return minus the expense ratio means their actual return would be 9.25%. After 40 years, person B would only have $2.34 million. The moral of the story is don't pay $500,000 in fees. Instead, invest in a low-cost S&P 500 index fund like Vanguard's VOO ETF.